For me, I want to know what's the potential range. If the market's bearish, that means the market going down. Why would I be looking at a third projected resistance level? It shouldn't even be on my radar screen, correct? If the market condition is still going to be in a downtrend, we should see lower highs, lower lows, correct? I want to see if the market is longer term bullish, as that British pound trend was, then I want to see what a pullback is, because I certainly don't want to buy it at 203. I would have had a much better chance of success buying at 200.5. Agreed? So with that said, buying it and then looking for another confirming tool would really help you as a trader. So here's what we have and here's what designed. I want you to look at this chart, and if you can see this, the lights are on, so for maybe online viewers it may be a little bit better. The people in the back room, you see that every day we have a blue and a gold line? We have a blue and a gold line. We have a blue and a gold line. And every time we see the blue cross below the gold, the market kind of gives us a change of direction and then moves lower. We have a change in direction. The blue goes above gold and then the market rallies. We have a change where the blue goes below the gold, and at the end of that day, guess what happens? We have an indication before the market breaks and we have a change in direction. That's the secret behind filtering out the pivots. Now, everyone's going to want to know what that blue and the gold is. And it's going to cost another slide or two, because we're going to dissect this. And I'm going to show you what this is. If the blue, and I'll tell you right now what it is. And if you have your little, for the audience, if you take this little pamphlet out here, which is kind of neat, because if you take the pamphlet out and you turn to the notes page and maybe write that down, and then therefore you'll have it all with the same section with the pivot analysis, you'll have it written down. The blue is actually the daily pivot point. And the gold is a 3-period pivot point moving average. It's pretty neat stuff. I'm taking a short-term yesterday's pivot point. Now look at the pamphlet, and for those online, I will describe what the pivot point is. The pivot point is what we consider also the typical price, which is taken from the prior session's high-low close averaged out divided by 3. Let's talk about this for a quick second. In a given trading session, the market has a huge range. The high and the low. They're specific points of interest, and they're very important. Right? I mean, the guy who bought the high of the day certainly isn't going to be buying that number again. Right? I mean, it doesn't feel good. The guy who was short and got stopped out at the high of the day, he's pretty much going to be looking at that number from now on. And the reverse is true for the low. The guy who sold the low of the day, he's pretty bitter. He's going to remember that number. The guy who bought a couple ticks off the low of the day, he's going to respect that number because, you know what? That'll trigger those endorphins off, and he's going to be buying that support next time around too, because that was easy money and that was a main payoff. So highs and lows were very important. But mathematically speaking, if we take the overall range, high and low, and then we take the close, if the close is closer to the low, what do we have? Two values at a low number, one value at a high number. If you average them all out, you get a typical price below maybe the midpoint of that range. Agreed? So you're taking three of the most important elements of a trading range, high, low, and the close. And that's the dynamic about using the pivot point, rather than just an arbitrary close to close. I want to compare and get where the close is as it relates to the overall range, because that really does. And even when we use candlestick analysis, most of you are using candlesticks right now. And if you are looking at what? The open-close relationship and the close to overall range relationship. In a hammer pattern, where you have a shadow at least 2.5 times the length of the real body, where's the close on a hammer? Is it closer to the low or closer to the high? On a bottom, and if it's a hammer bottom pattern, it's closer to the high. So if you took a pivot point of a hammer, you're going to have the average above the midpoint. So it'll help filter out the typical price or the true value of the market. And if I take the typical price or the true value of the market from, let's say, Thursday's close and high-low, and I take Wednesday's pivot point, and I take Tuesday's pivot point. So I take Tuesday's pivot point, Wednesday's pivot point, and Thursday's pivot point. I add those and divide by 3. That would be what? A 3-period pivot point moving average. Right? Thank you. That's the gold line.